Your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof of your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Somebody have the whole spiel down there, and then I get some block pops up in front of me. I personally work with you, even if you don't have needs today. Save this number in your phone for future reference. 800-306-1990, 800-306-1990. ADHD sets in. Yes, we're celebrating today. We celebrate every day on Ron Siegel Radio. National Sock Day. Is that really a thing? I guess some people like the fancy designer socks. You know, I have a wide variety of socks. Hanes black or a white sock to go under my tennis shoes. And I don't play tennis, but that's a different story. So easy for matching, right? It doesn't take a whole lot. Wildlife Conservation Day. What else do we? Oh, Cabernet Franc Day. Okay. There is something in that picture on the right. I don't know what that is, but it's I don't know. Cabernet Franc. I don't know. Merlot, Zinfandel, Syrah, Petit Syrah. Yes, there is a difference between Syrah and Petit Syrah. Don't ask me what it is. Those are my favorites. Just if you were curious. What else do we have? Josh, for you. For Vegas, it's National Dice Day. I used to play dice, but those look like, what is it? The crap table out there in Las Vegas. You can take your money pretty quick. And I guess having beaten anorexia, National Cookie Day. National Cookie Day. So, okay, we got to do it. Put in the comments, what's your favorite cookie? I'm going to start with chocolate chip, homemade, of course, or oatmeal raisin. Could be. Put it in the comments. Let's see what your favorites are. Chocolate chip, or what's your favorite cookie type? I got both of them in. I beat anorexia, so I can have more than one. Do you have a favorite there, Josh? Did you put it in there? Favorite cookie type. Come on, you guys can share with us if you're listening to us on the sugar cookie. Okay, that's pretty basic. Okay, so those of you that are listening to us on radio, just say it in your car or your living room. We'll hear you. What is your favorite cookie? Let's see what the markets are doing today. The Dow Jones Industrial Average up 227 points, pushed a lot by Salesforce. We used to have Salesforce. We got rid of our Salesforce account. S&P 500 is up 24. The NASDAQ is up 186. Oil down 53 cents a barrel. And we're watching out for the Fed. It's there on the top of the mind right now. And we'll talk more about that in the mortgage minutes. I have to put an S on the end of that one in a little bit. But we'll talk about more of that in a little bit as to what's going on there. Eli Lilly Zepbound's weight loss results beat those of the rival Wegovy. I can't say it. I don't know why they use those weird words when they give you some of these drugs. Tirzepatide, I think, is the one that I'm taking right now. I think it's called tirzepatide. Whatever. No one cares. As long as it works. Okay, so let's move right along. Jerome Powell repeating no hurry to get rates down. We'll see what happens with some of the news reports and some of the employment reports. Those are the biggies that are coming out. One came out this morning, a little misleading. We'll talk about why I believe it's misleading, but that did come out this morning. Let's take a look and see. Do we have any news on gas prices? Are they still climbing here in California? $4.40 a gallon, down a little bit from last week. $4.40 a gallon. 303 is the national average, down 4 cents from last week on the national level. And I think we are still one of only 2 states in the union that have gas prices that are in the 4s. Yeah, Washington's now below 4. I wonder if they have prices fixed in Hawaii, because it seems like it's almost always $4.57, right in that range for Hawaii. So I wonder if they do some manipulating of the numbers, because they do have such a large amount of gasoline refineries there in Hawaii. Not that I've ever seen even one of them. So I'm looking along the lines here. Current price $4.57. Yesterday $4.57. A week ago, guess what? $4.58. A month ago $4.57, and a year ago $4.70. All for Hawaii. I'm gonna have to go double check that, and I'll have to do some market research on the ground to check that one out. But those are the prices there in Hawaii. A lot going on as we get ready for the end of the year. We're watching all kinds of finances that are happening. Have you balanced your portfolio yet if you're a stock investor? Have you made your elections for your 401k for the new year? And the biggie that's going on right now, you can't miss it. Everybody's dealing with the different types of health insurance. So Covered California's got their open enrollment right now. Medicare's got their open enrollment right now. Everybody seems to have their different sources. Do some due diligence. Spend a little time and check it out, because I looked at my wife's company. I'm not a big fan of the insurance that they have. It's all just an HMO, but they're charging more than what Covered California charges. Now, I know not everybody that's listening to me has access to Covered California, but hey, you know something? If we are in the state of Calizuela, we're paying the taxes for it, so why not take advantage of some of these things, whether we believe in them or not? Because we don't have a choice, we live with it. So I'm looking into all of these things. Have you started doing any research on them? There's a lot to look over, and I'm just suggesting, you might. I think mine's 50% less by looking at Covered California than what some of the other services are. Just throw that out there for you. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, yes, we do have a great broadcast lined up for you today. We're going to chat a little bit about when mortgage rates will come down, year-end financial strategies, second chance checking accounts, and the impact of your credit score on your financial future. All that and more. Reach me on the off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
As the economy slows, do you know anyone worried about job loss? At Siegel Lending Team, we offer the Home Select Loan. Think of it as a financial superhero cape for homeowners with good income and credit. It not only saves your home, but also throws a life ring to your credit score. Because who needs stress when you can have peace of mind? Let's secure your future with a smile. Visit rsrhomeselect.com. rsrhomeselect.com. NMLS 217 037.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You need to make the call, 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual lock rates, with consumers across 35% of all mortgage transactions nationwide. What did the loans lock at yesterday? They don't tell us points paid, points received, or the APR. They just tell us what the loans locked at and the number you need to put in your mortgage calculator in order to get what your monthly principal and interest payment would be. If you don't have a mortgage calculator, rsrlinks.com/mobile app. rsrlinks.com/mobile app. You can get our mobile app for free. Costs you absolutely nothing. And that does have a mortgage calculator on there. Conventional 30-year fixed loans up 6.681. Jumbo 30-year fixed 6.849. That was down. FHA 30-year fixed 6.343. That was down. VA 30-year fixed 6.099. That was down. USDA 30-year fixed 6.347. That was down. And if you want our mortgage thoughts, our thoughts about the market for the day going forward, and a little bit of a recap, rsrlinks.com/market minute. rsrlinks.com/market minute. Let's take a look at what the markets are doing today. Well, we're looking at the S&P 500. S&P 500 is up 24.76. And we've got the 10-year Treasury. That is up about 3 basis points to 4.2. Mortgage-backed security, that one was up 13 basis points. Remember, when the bond goes up, as I just mentioned about the mortgage-backed security, that means the rate goes down. It's only 13 basis points, so it is not a massive change, but it is worth discussing because we'd always rather see those numbers go, the rate go down. I mean, even if it's just a little bit, we still want it to go in the right direction. What's driving the rates right now? Well, it has to do a lot with the ADP report. So, and I will share before I get the ADP report, I will share with you that we'll get some volatility later today because Fed Chairman Jerome Powell is speaking. And I think this might be like his last scheduled speech before they go into their quiet period, which leads into the December 18th Fed meeting. Comments as usually can be impact the markets. We will also be getting the Fed, easy for me to say, the Fed's beige book, which holds more importance than usual, as the Fed is closely relying on the commentary from their business contacts because the published jobs data is less than reliable. I wonder where we've heard that before, that BLS reports are not really all that reliable, and I know we've... Surprise! Yeah. So, November ADP report showed that there were 146,000 jobs created during the month, weaker than the 160 expected. Additionally, October's report was revised lower by 49,000 from 233 to 184. Today's report would have been even weaker if not for the seasonal adjustments. The raw figure was only 63,000 jobs created. I wonder why they can't just give us the real numbers instead of imputing these seasonal adjustments. Like we don't know. Oh, wait a second. They can't manipulate them there because don't you believe that small businesses are actually hiring more people during the holiday season than they would be than other times of the year? Well, the data shows that historically they take some people off of the raw data. This year, they almost or more than doubled the raw data to give us their report. Is there any manipulation in there? I wouldn't say that there's manipulation.
I got a bad feeling about this.
But I do have a bad feeling about this. Almost all the hiring was in large businesses. Small businesses with fewer than 50 employees continued to shed jobs. This time by 17,000. This is something to keep in mind for the BLS jobs report on Friday. Oh, well, wait a second. ADP, who pays the people, says they lost jobs in small business. Okay, who wants to bet me? Not really, just a gentleman's bet or gentlelady's bet or gentleperson bet that the report that comes out on Friday says that there's a lot of job gains in the small business sector. Yeah, is it manipulated? I don't know, but I would say
I got a bad feeling about this.
Yeah, I agree. Strongest sectors for job growth: education and health services up 50,000, construction up 30,000, trade and transportation up 28,000. Manufacturing continues to be weak and lost 26,000 jobs. Leisure and hospitality also showed some weakness, only adding 15,000. That would be the one where you'd think they'd be hiring people. Leisure and hospitality. People are traveling for Thanksgiving and getting ready for all of the winter holidays. These numbers are just pretty bizarre, if you ask me. Wages have decelerated over 2 years until today's report. ADP reported that annual pay for job stayers, or those remaining in their job over the year, increased by 4.8%, which is an increase from 4.7% in the previous report and bouncing off the lowest levels since July 2021. Job changers, or those finding a new job, getting poached by competition, saw an increase of 7.2%, which is an increase from 6.7% in October. While the trend has been lower in wages, the rise today did scare the market a bit, as it could lead to more inflation. And I'm going to just tell you, we're going to get more inflation. No one's going to tell you that, except if you're listening to Ron Siegel Radio. Why? Because historically, we always get more inflation once we've had a big inflation like we did recently. So we get a large inflation number, and we've been coming off of that. But now we see that that it's almost always it'll go down and then come back up a little bit. So why don't we anticipate that? If you're listening to Ron Siegel Radio, you will know that's happening. But I will tell you also that the numbers for the employment numbers, they're not good. No matter what, eventually, what's going to happen? So here, I'll just say that's the Mortgage Minute, brought to you by our friends at Geneva Financial. So here's the issue. When you look at the jobs numbers, the BLS is modeling. The Home Price Expectation Survey, they do some phone calls and then figure out what the numbers are from their phone calls. ADP, they have 25 million people that they do payroll for. I think they use about half of that for their modeling for their numbers that they come out with. QCEW, that's the census. Well, when you get a notice from the census, you have to answer it. You don't get a choice unless you want to pay the fine. So the number, then what happens is every 6 months or so, they have to true up the numbers. And that's why last year we saw that the adjustment was like, I think 176,000 the last time they did the QCW. I think it was to bring it down to took 176,000 jobs per month off of the numbers. So, and then the other part is these seasonal adjustments that we're seeing, like ADP did. Well, at the end of the year, we've got a whole year's worth of data. So there's no more seasonally adjusting. So they true up those numbers again in January for the prior year when they do their reconciliations. So the real numbers eventually start coming out. And we'll see that all these areas where I've told you that the numbers don't make sense.
Surprise, surprise, surprise.
We're going to find out what the real numbers are, and we'll see, do they make sense or don't they make sense? What is reality? And that's what we're going to be looking for, is to see where these numbers true up to and what the markets have to say. All the more reason for you to be prepared. And I know it sounds like we talk about this frequently, but I am going to share with you, any of you right now that are within the sound of my voice, if you qualify, and not everybody qualifies, should be looking at the Home Select product from our friends at Geneva Financial. You can go and take an in-depth look at it, rsrhomeselect.com, rsrhomeselect.com. Why do I say that? Well, I put out a message to our private clients yesterday just saying, do you think there's a chance that you may have some questions about your job? Now, we did look at a report, and this came out from the Federal Reserve Bank in New York about the data on what people are fearful. So again, based on October of 2024, 13% of U.S. workers expect to lose their jobs in the next 12 months. Now, do a little bit of math there. There's about, I think, 170,000 workers in the U.S. 13%, 170 million workers in the U.S. 13% would be about 15 million. If that happened, even if half of that happened, and they get added to the unemployment numbers, massive, massive numbers. That number is up 0.3 percentage points from the previous month, indicating a modest decline in job loss concerns. Survey also reported that the mean probability of voluntarily leaving one's job in the next year, 20.5%. That means it's close to 35 million people. Now, if you're in that either one of those categories, well, you might stress about the idea of losing a job. How are you going to pay your mortgage? How are you going to feed your family? How are you going to pay your electric bill, your utility bill? I know that not all the areas around the country they're going to laugh at me, but right now, I'm looking at 56 degrees here in North Orange County. 56 degrees. It was cold earlier. But if you have no electric, no gas because you lost your job, that gets really cold. Now, the Home Select loan, if you've got equity in your property, you have access to the equity and not one more. You might be able to skip making a mortgage payment or 2 or 3 or 10 because you can use that equity. Now, if you didn't have to worry about supporting your family, if you didn't have to worry about them going hungry, one, might be a little less fearful of losing your job. And two, you might be more likely to take a better job or go and look for a better job because you don't have the fear factor. Now, if you don't get educated on the Home Select loan, I can't help you. I just don't understand why you wouldn't be looking at that. But I would just say that
I got a bad feeling about
if
this.
you have a bad feeling about your jobs, your situation, just go and take a look. rsrhomeselect.com. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, when will mortgage rates come down? Year-end financial strategies, second chance checking accounts, and the impact of your credit score on your financial future. All that and more. Reach me anytime off air number 800-306-1990, 800-306-1990 at ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime, 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. When will mortgage rates come down? That is the question. One of the biggest questions on everyone's mind right now is, when will mortgage rates come down? After several years of rising rates and a lot of bouncing around in 2024, we're all eager for some relief. While no one can project where rates will go with complete accuracy or the exact timing, experts offer some insight into what we might see going into next year. Here's what the latest forecasts show. Mortgage rates are expected to ease and stabilize in 2025. After a lot of volatility and uncertainty, the most updated forecast suggests rates will start to stabilize over the next year and should ease a bit compared to where they are right now. And if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 FM 98.1 video feeds, you are seeing a chart of mortgage rate projections. 30-year fixed rate as of 11/25/24. These are the projections as of then. So we're looking at them, and we're looking at Fannie Mae, Mortgage Bankers Association, and Wells Fargo. And they're saying by the end of the fourth quarter of 2025, 6.33. Now, I know that I gave you some numbers, and I don't know if we have that on our video, Josh. Did we create a short link for that to show what my projection was and why for the numbers that are coming up? Lawrence Yun, chief economist of the National Association of Realtors, NAR, says, quote, while mortgage rates remain elevated, they are expected to stabilize, unquote. Key factors that will impact the future of mortgage rates. It's important to note that the timing and the pace of what happens with mortgage rates is one of the most challenging forecasts to make in the housing market. That's because these forecasts hinge on a few key factors all lining up. So don't be fooled, because while rates are expected to come down slightly, they're going to be a moving target, and the ups and downs of ongoing economic drivers will likely stick around. Here's a look at just a few of the things that'll influence where they go from here. Number one is inflation. If inflation cools, rates could dip a bit more. On the flip side, if inflation rises or remains stubbornly high, rates may stay elevated longer. The unemployment rate. The unemployment rate also plays a significant role in upcoming decisions by the Federal Reserve or the Fed. And while the Fed doesn't set mortgage rates, their actions do reflect what's happening in the greater economy, which can have an impact. Government policies. With the next administration set to take office in January, fiscal and monetary policies could also affect how financial markets respond and where rates go from here. Remember, these forecasts are based on the best information available right now. As new economic data comes out, experts will revise their projections accordingly. So don't try to time the market based on these forecasts alone. Instead, the best thing you can do is focus on what you can control right now. Work on improving your credit score, put away any extra cash for your down payment, and automate your savings. All these things will help you reach your homeownership goals even faster. And be sure to consult with a certified liability advisor, CLA, so you always have the latest updates and an expert opinion on what that means for you. Bottom line, if you're planning to move and want to stay informed where mortgage rates are heading, give me a call, 800-306-1990, 800-306-1990. We probably, can't promise, but we'll probably have our 2025 home buyer's guide. That'll probably be coming out later today. And I'll have a new link for Josh to put that on, because the other one is going to stay the same. But, we do the one quarterly, but this one's for the whole year. So our 2025 home buyer's guide, that is the real-time real estate segment, brought to you by rsrmoney.com, rsrmoney.com. So let's take a look. Your Credit Matters segment today being brought to you by creditsanitizer.com. You've got a credit report, it's wrong. Let's talk about it. So, the impact of your credit score on your financial future. Your credit score is a pivotal factor influencing various aspects of your financial life. It affects your ability to secure loans, the interest rates you're offered, and even potentially employment opportunities. Understanding how your credit score impacts your financial future is essential for making informed decisions and achieving financial stability. A credit score is a numeric representation of your credit worthiness, typically ranging from 300 to 850. It's calculated based on factors such as your payment history, amounts owed, length of credit history, new credit, and types of credit used. Lenders use this score to assess the risk of lending to you. How your credit score affects you. Suppose you want to borrow $200,000 in the form of a fixed rate 30-year mortgage. If your credit score is in the highest category, 760 to 850, a lender might charge, 5-6%. This means a monthly payment of, I'm not going to give you the payments. If your credit score is lower range, 620 to 639, it might be 7 to 8%. Implications beyond loans. Your credit score doesn't just affect loan approvals and interest rates. It can also influence, and some of these, you have to look at your local laws. Insurance premiums. Insurers may use credit information to determine premiums with lower scores, potentially leading to higher costs. Employment opportunities. Some employers review credit reports during the hiring process, especially for positions requiring financial responsibility. Housing applications. Landlords often check credit scores to evaluate rental applicants, with poor scores possibly hindering approval. So here's some strategies to improve your credit score. Enhancing your credit score requires consistent and responsible financial behavior. Timely payments is a key. We've talked about that one in the past, getting those timely payments. And I will tell you, go check out rsrlinks.com/FICO. rsrlinks.com/FICO. Manage credit utilization. Keep credit card balances low relative to credit limits. A utilization rate below 30% is advisable. Another resource for you, rsrccpayment.com. rsrccpayment.com. Number 3, limit new credit applications. Frequent credit inquiries can lower your score. Apply for new credit only when necessary. Number 4, diversify credit types. A mix of credit accounts, such as installment loans and revolving credit, can positively influence your score. Number 5, regularly review credit reports. Check your credit reports for errors and dispute inaccuracies promptly. Bottom line, your credit score is a critical component of your financial health, affecting borrowing costs, insurance premiums, and even job prospecting. By understanding its impact and actively working to improve it, you can secure better financial opportunities and ensure a more stable financial future. And as I share with you all the time, a key is to consult a certified liability advisor. And yes, that is what we are. We did get that credential, did a lot of studying. In fact, we do study it all the time. And why? Because we focus on helping families build wealth through better debt management. That's Your Credit Matters segment, brought to you by creditsanitizer.com. You have a credit report and it is wrong. What are you doing about it? Now, again, from the planning standpoint, if you're worried about your credit scores or you're worried about your financial future, if you're over 62 years of age, highly, highly recommend the reverse mortgage. At least look into it. If you want more information on it, rsrlinks.com/reverse. rsrlinks.com/reverse. And we'll get you information on the reverse mortgage. It is a great program. And I don't say that lightly. I don't say it just because I sell them and offer them. I tell you that because I got one for my parents and they lived with it for many, many years. And when my dad passed, my mom didn't have to worry about making a mortgage payment. And when my mom passed, the property went seamlessly through her estate. Very, very simple. And I understand them from more standpoints than most people, just because most people that do the reverse mortgage, well, they've dealt with it from a standpoint of educating the borrower and getting it set up for them. Living with the person and then also helping to liquidate it, that's where we have a little bit of a difference, and we come in to help people even more. So take a look at this, rsrlinks.com/reverse, and at least understand it, because again, like the Home Select loan, payments in most instances are optional. They're optional. So again, just take a look at that, rsrlinks.com/reverse. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, second chance checking accounts and year-end financial strategies. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Borrow Smart segment today being brought to you by rsrhomeselect.com, rsrhomeselect.com. Rebuilding Financial Trust, a guide to second chance checking accounts. Life's financial missteps, such as overdrafts and unpaid balances, can hinder access to traditional banking services. However, second chance checking accounts offer a pathway to restore financial credibility and re-enter the banking system. Understanding second chance checking accounts are tailored for individuals with adverse banking histories, providing essential banking services while promoting responsible financial management. These accounts typically feature mandatory fees and certain limitations, but serve as a bridge to standard banking privileges. The advantage of a second chance checking accounts: access to banking services. They offer fundamental services like direct deposits, bill payments, and debit card usage, reducing reliance on costly alternatives such as check cashing services. Financial rehabilitation. Demonstrating responsible account management can lead to eligibility for standard accounts with enhanced features and reduced fees. Safety and security. Maintaining funds in a federally insured account provides greater security compared to handling cash. Considerations and potential drawbacks. Fees. These accounts often come with unavoidable monthly fees. Limited features, services like overdraft protection or check writing, may not be available. Usage restrictions. Some accounts may impose spending limits or require financial education courses prior to opening. Eligibility and application process. The eligibility criteria vary among financial institutions. Applicants may need to provide proof of identity, address, and may be subject to credit or banking history evaluations. Some institutions might mandate participation in financial literacy programs. Transitioning to standard accounts. Consistent, responsible management of a second chance account, typically over 6 months to a year, can pave the way to qualifying for a standard checking account with more favorable terms. Alternative banking options, prepaid debit cards. These allow spending up to the loaded amount but may incur high fees. Credit union accounts. Some credit unions offer accessible accounts with flexible terms. Bottom line, second chance checking accounts provide a vital opportunity for individuals to rebuild financial trust and gain access to essential banking services. By understanding their features and committing to responsible financial behavior, one can progress towards greater financial stability and inclusion. That is the Borrow Smart segment brought to you by rsrhomeselect.com, rsrhomeselect.com. I think we got time. We'll give you one more Borrow Smart segment today, brought to you by rsrhomeselect.com, rsrhomeselect.com. Year-end financial strategies for homeowners and first-time buyers. As the year draws to a close, it's an opportune moment for homeowners and prospective buyers to assess their financial standing and make strategic decisions, whether you're aiming to purchase your first home, refinance an existing mortgage, or enhance your financial health. Implementing thoughtful year-end strategies can set the stage for a prosperous new year. Number one, evaluate your financial health. Begin by conducting a comprehensive review of your financial situation. Examine your income, expense, savings, and outstanding debts. This assessment will provide clarity on your financial readiness for home ownership or further investment. Budget analysis. Scrutinize your spending habits to identify areas where you can reduce expenses. Redirecting these funds towards savings or debt repayment can significantly improve your financial outlook. Credit check. Obtain your credit reports and scores to understand your credit worthiness. A higher credit score can lead to better mortgage terms and interest rates. Number two, optimize debt management. Effective debt management is crucial for financial stability and wealth accumulation. Consider the following approaches. The debt snowball method. Focus on paying off debts with the smallest balances first, while maintaining minimum payments on larger debts. This strategy can build momentum and motivation as you eliminate smaller debts. Debt avalanche. Prioritize debts with the highest interest rates to minimize the total interest paid over time. This method can lead to greater savings in the long run. Strategic debt leveraging, utilizing low interest debt to invest in appreciating assets, such as real estate, to build wealth. This approach requires careful planning and risk assessment. Plan for home ownership. If you're considering buying a home, strategic planning is essential. Down payment savings. Establish a dedicated savings plan for your down payment. Explore down payment assistance programs available for first-time buyers to alleviate financial burdens. Mortgage pre-approval. Seek pre-approval from lenders to understand your borrowing capacity and demonstrate seriousness to sellers. First-time buyer programs. Research state and local programs offering benefits such as low-interest loans, grants, or tax credits for first-time buyers. Number four, refinance existing mortgages. For current homeowners, refinancing can be a strategic move. Did you hear us talk about the two-step rsrlinks.com/two-step interest rate reduction? Monitor market trends to refinance at lower interest rates, potentially reducing monthly payments and overall interest costs. Remember, your mortgage rate doesn't matter. It's your total blended household interest rate that's important. We talk about that, why that 3% loan will kill you. rsrlinks.com/3pct. rsrlinks.com/3pct. Loan term adjustment. Consider shortening your loan term to pay off your mortgage sooner, which can lead to substantial interest savings over time. Now, don't go and get a 15-year mortgage. I am totally against those because you have a mandatory payment. How about getting that 30-year mortgage? And by strategically changing your payment amount, you can change your effective APR. Change the effective APR. Number five, maximize tax benefits. Leverage tax advantages associated with home ownership. Mortgage interest deduction. Deduct interest paid on your mortgage to reduce taxable income. Property tax deduction. Deduct property taxes paid during the year subject to IRS limits. Energy efficiency credits. invest in energy efficient home improvements to qualify for tax benefits. Number 6, build an emergency fund. Establishing a robust emergency fund is vital. Financial cushion aimed to save 3 to 6 months worth of living expenses to safeguard against unexpected financial setbacks. Automatic savings. Set up automatic transfers to your savings account to ensure consistent contributions. Number 7, consult financial professionals. Engaging with professionals can provide personalized guidance. And obviously, number 1 is the Certified Liability Advisor, CLA. Work with the CLA to develop strategies for building wealth through strategic debt management. And a financial planner. Collaborate with a financial planner to create a comprehensive plan encompassing savings, investments, and retirement goals. Number 8, review insurance coverage. Ensure your insurance policies align with your current needs. Homeowners insurance. Confirm that your policy provides adequate coverage for your property's value and potential risks. Life and disability insurance. Evaluate policies to protect your family's financial future in the event of unforeseen circumstances. Number 9, set financial goals for the new year. Define clear, achievable financial objectives. Short-term goals. Plan for immediate needs such as home repairs and minor renovations. Long-term goals. Focus on significant milestones like purchasing a new home, funding education, or planning for retirement. Number 10, stay informed on market trends. Keep abreast of developments in the housing market, market condition, and yes, of course, we've got a report for you for that. rsrlinks.com/market report. rsrlinks.com/market report will tell you the market conditions for your zip code. Policy changes. Be aware of potential legislative changes that could impact housing and taxation. By implementing these year-end financial strategies, homeowners and first-time buyers can position themselves for success. Thoughtful planning and proactive management of finances are key to achieving homeownership dreams and securing a financial future. That is the Borrow Smart segment, brought to you by rsrhomeselect.com, rsrhomeselect.com. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Make a lot of money.
Pour me something.
Talk to you next time